Hi, everyone. How you doing, Paul? Jatine? Team? Euro's pushing the new lows. The Bears do feast on Thanksgiving, but they were supposed to feast on the stock market. They feasted on precious metals. I hope they didn't break their teeth. The Bears feast on Thanksgiving. The Bears feast on Thanksgiving.
Good morning, Blake.
The Bears feast on Thanksgiving. They're eating everything. These
The dollar
Bears.
is still very strong, right?
Huh?
The dollar is still very strong.
Yeah, so the Bears are, have the drumstick and everything. And yeah, the dollar, I have divergences here still came in, but I'm down 45, 25 on that. And Euro, I'm glad I took partial profits when it popped here, but I can't short it down here either. But they're just grinding into this close. Oh, good
Yes,
one.
I think we're grinding into the 111.70 and then some measured move of an head and shoulders, probably down into the 111.30s.
You want to share your screen?
I
know how to do it?
Can't really, but I can't really right now because I've got a few other things on top that I need to continue to watch.
Okay. All right. It'd be great to see your setup and kind of, a picture speaks 1,000 words.
Hey, good morning, guys. How are you?
Hey, go ahead.
Good morning. Hey, good morning.
Good morning, Blake.
Next time it's free to share, okay?
Okay, sure.
I think we're missing Ryan today. I believe he's out.
Yeah, he's off for the next few days.
Yeah, I guess his annual thing is when, and since this is our first year partnered up with Ryan. I think this is his. I guess when he goes, or no, we're on Thanksgiving, the U.S. holiday. Him and his friends go get have fun.
Drunk.
Yeah,
I think they were supposed to go to Austria for the soccer football, but
wow.
they couldn't. So they arranged something different.
Oh, nice.
Yeah, you can't get into Austria. That's right.
Yeah. Hey, speaking of football, I got to tell you this, and this is personal information, guys. This has nothing to do with the market, but I got to share this with you. My youngest son, he's a goalkeeper for football, soccer, however you want to look at it. He is 14 years old, and he is playing on the varsity team, which is here in the United States, it's the mostly 18, couple 17-year-olds. So he's playing up, and he's smaller than everybody.
Is it
else.
A high school team, Blake?
Oh yeah, high school varsity.
Okay, all right.
And
so varsity, yeah. So he made it as a freshman.
As a freshman, yeah.
Wow, that's a big deal.
Nice.
Yeah,
how many freshmen make any varsity team?
No, there's only one other kid. And so, and he's significantly smaller. I mean, everybody else is like an adult, and he's like still a few inches shorter. Anyway,
well, puberty, like his dad, puberty comes late.
No, right? That hasn't hit yet, but let's, it has. It has. I take that back. It just, he hasn't like got his growth spurt. Anyway, he hasn't like gotten that extra 5-6 inches, but it was really, yesterday was his first, he's the backup, but he did play half of the game yesterday, and he got ran over like by the striker, like really like ran over, like it like hit, like when he got up off the field, the entire, field started clapping because he just got, it was his first play, and the guy didn't score. But the fact of the matter is he got up and he held the team for the remainder of the game, which is, it was awesome. It was a proud parent moment. A little scary when you see your little one matched up against a bunch of dudes, like big dudes. But yeah, anyway, so that was my little personal soccer story. So anyway.
Yeah, nice.
Anyway, hey, so we're a day ahead of Thanksgiving, and I guess we should probably take it over to the markets. Day ahead of Thanksgiving, and here we are with the dollar near its highs, and we've got a lot of really key data coming in today. So, what are your thoughts here, guys? I mean, I'm sitting here looking around, and here's the euro about right. I'll give you my thoughts on the euro, but you got the euro approaching 113 or 112 and stops below 112. You got some pretty key data today. You got GDP data here in 25 minutes, durable goods orders. You also have PCE, which is probably the most important piece of data in about 2 hours from right now. And then you have the FOMC meeting minutes. Just when you think it's all over, you're like, crap, I got to stick around for the minutes because they do matter. Like minutes didn't matter a few months ago. Minutes matter now because now people are like, how
when you're
hawkish.
my age, seconds matter.
That's a good one. But you guys there is a lot of data coming out today, and it's pretty important data. So what do you make of the price action? Well, let's start with Kman, since we heard your voice, and then I hear Stelios in the background. Kman, what do you make of the price action overnight?
Over in the dollar or in the Kiwi, or
just in anything. I mean, the
dollar is
bullish. Yeah, you can start off and talk about the Kiwi. I mean, RBNZ.
Okay,
RBNZ raised rates, but I read it as a dovish hike.
Well, let's say it's dovish compared to the prior comments or gave. Okay. Also, if we look at the prognosis of the RBNZ for rate hikes next year, the rate that they plan to stop at is, I think, 2.14%, which means not the 25 BPs at least rate hike that the market may have been expecting every meeting of 2022. They did hike the expectations from 165 to 214, but still, if you take into account 8 or 9 meetings, there's only going to be 5 or 6 hikes, or was less hawkish, I think, than the prior meeting when they really signaled they would go ahead and press ahead. Some part of the market was also expecting 50 basis points last night. We only got 25. So I guess the expectations have been screwed back a little bit. The rest to me is dollars. Probably the Kiwi market was a tad long. We had a rally actually in the Kiwi just before the RBNZ, but then that reversed, and now we are we are below 69 cents. 69 and a quarter was a bit of a level. The dollar strength helping. We are below 69 cents, and overall the dollar still looks strong, and the Kiwi can't really keep up with it despite RBNZ hiking rates. So I'm personally not trading it versus the dollar because I'm quite dollar bullish. I'm still a little bit short Euro Kiwi, but forces to admit that the thing is just ranging for now. So we're going to have to see what the expectations will be for the next meeting. That about the RBNZ, and then quickly, as I said on the dollar, I'm still bullish. I'm looking at the yields; they go up. The dollar is the dollar is still a wanted animal. We had a small drop in yen pairs this morning, especially on the yen crosses. But then dollar yen retakes the 115 relatively easy. Euro dollar is now trading 112. The figure, as I was saying, like at the beginning, I think you were talking about the 111.70 Stelios as well, myself as well this morning. That's a level, and then I have
111.70. Why? Kman, just real quick. Yeah. One of the reasons why the 111.70 level is so big is
for a prior low as well.
Yeah, I want to talk about just a couple of technical reasons why it's so big. It's the 161% extension of really the November 2020 lows to the that trend high that came in January 2021, where everybody thought the euro was going to go to 130, and then we've seen nothing but the opposite direction all year. So that's the 161% extension. But more importantly, it is the multi-year trend line. Like when I say multi-year, I could say actually over 10-year.
Yep, that's the one I put in the chat room this morning. I have the
yeah,
exact
you know
same
what,
one.
Stelios? I talked about it way before you.
I know you did.
I'm just kidding. I'm joking. But no, I'm totally joking about that. But what I want to say is it is really a critical level of support because it's back testing a massive breakout trend line that has been in existence since the financial crisis, when so many traders haven't even seen anything like that. So I have been looking for 111.70. Kman, I know you're referencing it, but I just needed to interject and tell everybody why it's so important. All right, go ahead. Sorry about that.
No problem. And then, and unfortunately, as I said earlier, I can't really share my screen because I've got a few things loaded up. But there's a head and shoulder measure, in my opinion, is around 111.30. So call it 111.30, 111.70. I think we are looking at an area. But the one last thing I would like to say is that in the euro dollar itself, we have not seen, apart from once or twice when we broke levels in the 117, 116, and then 113 and a half, we haven't really seen any acceleration right now. And usually, if you look at it technically, at the end of the move, we usually get an acceleration, and we haven't had it yet. Is it coming today? Perhaps, but anyway, I'm going to take profit on my shorts when we see the acceleration.
Okay, well, let me ask you this. So, and then Stelios, we want to get your view too. So, what do you think about all the data that's coming out? I mean, we have GDP data, which is always backward looking anyway. So, I'm not really so I'm not so concerned with the GDP numbers. I know everybody else looks at GDP. Well, everybody else, like us as traders, we don't really care about it so much, but we do have durable goods orders. We have the PCE coming in later today, and we have the FOMC meeting minutes. So what should we expect out of that data coming out, Kman? What do you think?
I think the biggest reaction may be on weaker numbers, because the market's mood is now relatively buying dollars, right? Versus nearly everything. So a bad number could see a setback, but are we going to get a bad number? I'm not sure. Because I think the rate of recovery in the States hasn't been bad. So do we really have to expect worse numbers? I don't know. I mean, durable goods, I'm not even sure that a lot of people are really going to watch it.
Right.
Watch it. The jobless claims, okay, it's a weekly one, it's frequent data, but how shall I say,
I don't think that's really the
continuation
focus
is
right
still
now,
pretty
right?
good. Sorry?
Yeah. That's not really the focus right now. I don't know if everybody's so focused on the jobs picture, because we have a good idea what that means. But how about that PCE data? I mean, this is the Fed's, one of their inflation gauges they
It's
really
the preferred
watch.
one. It's the preferred
Yeah,
one.
it's their preferred one. So what do you think about that?
On the core PCE, right? Their focus, right?
Yeah.
Yeah.
4.5% is way above their target. So, but again, it's Q3. It is Q3. We know that in Q3 everything went higher. It's not unless there's a more recent number coming out there. There are still Q3 data. We are nearly December, right?
Yeah, I mean, so well, I mean, you can see the elevated inflation data that we're looking at. I mean, so the fact of the matter is the markets are going to be focused on that, and I think if you are a trader and you're like, well, it's U.S. holiday, so after this GDP data comes out, I'm out of here. I don't think I think you have to stick around. You have to stick around for a little bit. You got to be focused on what's happening. And we do have the FOMC meeting minutes too. And, everybody right now is checking boxes. They've got a list of, who's naughty, who's nice on the Fed, on the Fed board right now. They're trying to figure out who's hawkish, who's dovish. And so everybody's taking notes. So I think you guys and gals need to be around for the FOMC meeting minutes. So Stelios, what do you, and
yes,
by the way, thank you, Kman, for your input there. We have about 15 minutes before GDP data comes out. Stelios, what are your thoughts here?
For me, data-wise, core PC is important. And the question now becomes, what's the market pricing and what kind of reaction do we see on either side? So if it's a stronger number or a weaker number, the more the dollar strengthens and the more the market gets bulled up on the dollar and on US in general, the more the risk gets skewed for a bigger reaction on the negative side. I mean, that kind of makes sense. Our friend David is asking if PC comes in softer, we probably get a sell-off in the dollar. Which one to play? He says, I sell dollar yen. I would agree. I'd probably go with dollar Norway as well, which always overreacts on either side. It's up 1% today.
Some things never change.
Some things never change. Yes. But I think that the risks are now mounting slowly, that we are going to get disappointed one way or another. Because, I mean, I said this last week or this week. What's the market pricing? We're pricing a total end of the taper by the end of second half of the first half of next year, and hikes before the end of next year. Actually, quite a bit before the end of next year, from what I understand. So, for that to be brought forward, it needs something extraordinary to happen, I think, compared to what we already have. So I think the risk is for the move is going to be bigger if the market disappoints. Having said
like what Kman was
strong,
saying,
and
like what Kman was saying earlier.
Yes.
Okay.
Yeah. So having said that, the dollar is very strong, and euro dollar, I think 111.70-ish is that huge trend line that you showed, and that could be a really nice kind of risk reward long in that. But I'm waiting, and I the thing I still look at is yields. Yields are going higher, yes, but we're at 167 in the 10-year, so we're still not breaking. Sorry, can I just
you know what? You take that.
For a second.
You take that. It stinks when your boyfriend's calling. So let's he had to answer, and he doesn't even get a chance to respond to that. Huh, Dale? Isn't that funny?
Yeah, you got him.
I got him good.
Yeah.
All right. So what David was saying, and by the way, David's been a great addition to our chat room. I saw David on Real Vision. I saw his video on Real Vision. What was a couple years back there, David? So he does some analysis for a couple of groups, or hopefully have him on Trader Summit here in the next few months.
I'm back. Sorry.
No, how was your boyfriend? You good? Everybody good?
That was a wife, and I have to pick up the wife always. Rule number one.
All right. Well, real quick, let me just mention that David was talking about selling the dollar yen. You were just mentioning how yields are strong. I do have to point this out. We are above 115. And that's the one thing that we need to take note if the dollar continues to hold strong. when David says sell dollar yen, I agree with that if we do have weak data. The reason why I say that is because this would end up being a false breakout. And how many stops are just consistently getting triggered above this 115 level? I think if you get back below 115 is a failure. However, I got to point out a couple of things. Yes, we can identify that the dollar is coming into a lot of resistance. The euro is coming into really key level of support here on the euro. But did you guys see the Swissy this morning? Now, the Swissy is above, this 2-year broken trend line. There's a big triangle that we've been forming, big consolidation, and we broke above that, the last couple of days. If the Swissy gets above this resistance, this is where you start getting the, oops, sorry, I just hit my mic. This is where you could get a really big acceleration in dollars across the board. So before you go out and just, the data, before data comes out and you're like, screw this. It's a weekend. No one's going to get carried away here. I'm just going to go ahead and fade the US dollar. I'm going to get ahead of this move. You guys do have to see that the dollar is breaking out against a lot of things. You got the Aussie dollar breaking down below channel support. You got the Kiwi breaking below channel support on the, as Kman pointed out, their statement was more dovish than the last one. So I call it and quote as a dovish hike. Dollar Mexican peso is ripping higher. Okay. Dollar Rand has the inverted head and shoulder pattern moving up. Dollar yen is breaking out. Dollar index has been nonstop. And I don't want to say that we can't pull back, but this is also, as Kman pointed out, this is a situation where the dollar could really accelerate. Look, if we're going in a US holiday weekend. It's Thanksgiving. They know liquidity is going to be poor. If I'm an institution and I'm short dollars, I am absolutely pooping my pants right now. And I do not want to be stuck short.
They let you trade from there?
Huh? What?
You said if I'm in an institution.
No, I said if I'm an
short
institution.
dollars.
Sorry, but look,
No,
if I'm short the dollar, I am absolutely right now panic stricken. And if the dollar, if all this data comes in strong, I'm going to want out before the liquidity gets really poor over the next couple of days. I mean, I'm just thinking out loud here. I know how traders love to fade, these big, strong moves. And they're like, yeah, look at me. I picked the top or I picked the bottom. But man, this is when we get into holiday season, these things get a little tricky and it gets a little dangerous, especially if you fade moves when their liquidity starts to dry out. So just be really careful here. I know it's very enticing to be shorting the dollar right now. Super enticing.
And Blake, how markets love to find the pressure points and the pain points, right? For a certain level. So, you're absolutely right. And once this starts going, that people are going to get, they're going to pile in trying to extract maximum pain. They always do that. I would venture
to guess that above the 98 level in the dollar index is max pain for dollar shorts. And that's really far from where we're at. Right?
Yeah.
Think about this, guys. If all this data comes in strong, we talked about yields. Look at yields. Look at the risk. Yeah. Yields start breaking out. I mean, we start
2%.
Oh, we're going to be at 2% before you can bat an eye. And the next thing you know, the market's going to crap its pants above 180, 190, 2%. Then if the market starts, the market starts freaking out on strong yields, and the bond market crapping the bed, then what does the dollar do? It just accelerates the rally. What already hurts. So I know it's
year end.
Yeah, and then we go into year end, right? And then no one wants to be in anything, and everybody just wants to be in the dollar because they're just trying to hedge losses. So I know, like I said, I know it's very, very enticing and sexy to pick the top and to fade these big moves and say, I did it, stand on top of the hill, yell out on Twitter because you never take losses anyway. Yell out on Twitter, I win, I picked the top. I know that's very enticing, but be very careful, please.
Blake, with this scenario, should it unfold, wouldn't you think that risk off and NASDAQ's having a negative week, S&P's really haven't come back from their high at 40, that we'll see a continuation of this sell-off here?
I mean, David had mentioned earlier about, the dollar yen. He was, he's in our comments. He was talking about the dollar yen. He pointed out in our chat room the outside day, or the bearish engulfing in the NASDAQ. It
was a bad day.
It was a bad day, and look, the continuation's there. Yeah. This channel breaks, we're going to be testing this breakout point, in my opinion. Yeah. S&P, I don't really worry about it right now, but as I've explained in the date. Okay. For those of you that are ForexAnalytix subscribers, you have the ability to listen to the Morning Edge and the Daily Roundup. That's where myself, Stelios, Steve, we take, and then plus you get the European crossover with Pauly. But that's the time where I really spend, I spend 30, 40 minutes sometimes just talking about things, especially in the Daily Roundup. We just kind of catch up on things. And I might rant a little bit. And I've been talking a lot about, the S&P not being bearish and, a lot of support down here. And I'm trying to figure out, the scenarios where the dollar really starts to, sell off and test support, even if stocks go down. But we have the NASDAQ rolling over, and that is our leadership, Dale. And the S&P still looks really bullish. I don't really worry about it while we're above 4550, as far as, turning. Yeah. But man, you see NASDAQ turn lower. I do start to, get a little concerned with what might happen with the S&P here. Well,
that's a nice trade from here to 4550.
I mean, from a percentage perspective, from current levels, you're talking about a 3% move, I'm not worried about risk off, but then I look at the dollar and I think, well, what happens to the dollar if the S&P actually starts to roll over? The dollar is strong right now. Euro could be trading at 108. If we get a sell off in a year end because bonds are breaking down and yields are ripping, we could see the, dollar yen at 117, euro dollar at 108. Why not? Right? We should probably be asking the questions, why couldn't it? Instead of, or trying to second guess it, is that even possible? And I think the answer is yes. So anyway, we have about 5 minutes for data.
One more thing I want to talk about.
Yes, please. Let's do it.
If you,
are you going to talk about gold?
No, I'm going to talk about oil.
Okay, but go ahead.
So yesterday we had the coordinated release of reserves. Yeah, very funny. Of reserves by so many countries like US, UK, China, India, Japan, whoever else it was, and it barely moved. And that tells us a story. And I think I'm personally looking to get long oil. I'm thinking about how to do it. Probably the March futures, but it's something that is showing great strength. The release of the reserves, and actually I think it ended up positive yesterday. So this is something I'm looking to do, and I think it would be dangerous to try and obviously anybody can go long or short, but I think this reaction kind of tells me that the next move is probably higher. Having said that, if we do get a risk off move like you said, Blake, then that's going to probably drag everything with it. But,
thank you for those thoughts. I know I personally appreciate it. Kman, you have any other thoughts before the data comes out? We're going to cover that data live before Peter Bookfar comes on.
I'm going to hook off because I have to put the data on the live blog. Watch 115.48 dollar yen. It's 61.8% of the big move 2015, 2016 of the big move lower. I think if 115.5 goes, dollar yen may get his next acceleration.
Wait a second. Let's see.
2015, 2016, the drop.
Okay, 2015. Okay, so
the one in the middle.
Yep, right here.
61.8 should be around 115.5.
Ah, good eye. So that comes in, about 115.50, 115.60. I think there's a lot of open air really in the dollar yen if it starts breaking higher. I know you've been bullish, Kman. If you look at just this weekly trend line, it doesn't come up until 118. That we could very easily we could very easily just, especially with bonds breaking down, we could very easily squeeze up here without much issue. And you could still argue that we're in a range. does it really disrupt what has happened over the course of the last, 5 years? No, it doesn't. So we could still reach up here without much of a, issue in the trend. Anyway, thanks for your thoughts. Kman, we'll see you in the chat room. And if you guys are new to, if you're not new to ForexAnalytix, there's by the way, that's our code for dollar Mexican peso. For those of you that don't know, if you have short Mexican peso, you're trading Salma. We have our general chat room, Spanish chat room, our trades room, the Forex Flow live room, news and research room where we post all of our things. We upgraded all of our chats today because what you're going to be seeing in the next couple months, you're going to be able to put multiple chat rooms on the same page. So we continue to upgrade ForexAnalytix to make sure you guys take advantage of that. Let's go take a look at this data as it's coming up. So Stelios, how much time do I have?
You have just over 30 seconds, mate.
Okay. So thank you. We're going to open Data Flash. This is part of ForexAnalytix too. If you want to get like the data as it's coming out. Also, you can go over to Live Squawk. You can get their feed as well. I'm gonna pull the Data Flash over since you guys can only see one of my charts. I want to pull Data Flash over here, and we're gonna take a look at that data. This is a 1 minute chart. So remember this. I'm not expecting huge moves right now, but you can see the dollar's already squeezing. I mean, people are just trying to get out. They just don't want to be in. If I was like short the dollar, I would probably feel the same way. It's like, dude, just get me out. I don't want to.
Okay, let's see.
Durable goods orders come in. Revisions higher. GDP came in a little soft. Actually, I think a lot of people are looking for 2.2.
2.2, yeah.
So
that's a non-event.
It is a non-event. I think people look past all that. But durable goods, came in.
Yen selling off, dollar.
Yeah.
Interesting.
Maybe it's the revision of durable goods revision.
Yeah.
That just came out. Maybe that's it. I don't know. I wouldn't. It's only a 1 minute chart, so let's really take that into perspective. This is a 15-minute chart, just to give you a little bit better. Look, I'm not even trading the dollar right now at this very second. I'm actually waiting for the PCE data. I think the PCE data is going to be the mover. But once again, let me stop and say one last thing before Peter comes in. I know how traders are. When you get into a trade, if it is like, let's say and I'm just going to use this as an example. Let's say the euro dollar breaks through 112 and you're like, and the PCE data comes out and it's below 112 and you buy the euro, you get long, and then it just grinds lower into the FOMC meeting minutes. So like you're long and then you get this grind lower.
I'll give it a chance.
I'm going to ride this one out. And then we go into a long holiday weekend, and next thing you know, instead of being down 10 or 12 pips, you're down 40 or 50 or 60 pips.
I'm going to average out next week.
Yeah. Long term, I think this is a good trade. You go from the day trader to the swing trader, position trader to a religious trader. So don't be religious if you're not a religious type of person. Stop praying for your trades.
Hope.
Just, hope. It's a goodbye. Goodbye boat. Goodbye car. Goodbye wife. Goodbye.
Well, what happens when you go to a store and you buy something cheap? It breaks.
All right. That's true. All right. Hey, guys and gals, I want to say, for those of you that are listening to the free F.A.C.E webinar, and this is what you tune into, we will not be here the next couple. Well, let me take that back. We will not be here tomorrow. It's U.S. Thanksgiving holiday. Friday, I will not be here. Dale will not be here as Americans, nor will Polly.
But Psycho Steve and the Stelios are going to
be here. Psycho Steve from Athens, Greece, and Psychopath Stelios from Athens will be here broadcasting on Friday. Right, maybe. But Steve likes to talk, and he likes, to say his piece. So he'll be here because he likes to make sure that you guys are taken care of. He'll be here on Friday for sure. So for those of you in the United States that are celebrating Thanksgiving, I am very thankful for you listening in every day. And I hope you have a wonderful, safe holiday season with your family and with friends if you're seeing them. And thank you for all of your continued support here at ForexAnalytix. We appreciate you all. For those of you that are part of the community, I'll see you on the morning edge in about 45 minutes.
Have a great holiday, Blaker.
Thanks, everybody. And you do the same, Dale. Happy Turkey Gobble Gobble Day to you.
You too, Stell. See ya.
See ya.
Rest of the team. And Peter Bookvar, welcome back to F.A.C.E.
Morning, guys. How are you?
Okay, pretty good, Peter.
Good morning, Peter. Happy Thanksgiving to you. I'm going to check out and let you guys continue on.
Yeah, to you as well. Thanks.
All right.
So Peter, why don't we start with Paul's reappointment reaction?
Well, I mean, essentially all they did was reappoint, the most dovish Fed chair we've ever had, but just so happened to be maybe a touch less dovish than what could have been with Brainerd. But the two of them have worked together since she was appointed in 2014. He came aboard, I think it was 2012. So there is a similar thought process. They've never disagreed in terms of votes, and I don't expect any
they ought to get married
then. Course.
What do you think?
Yeah, well, they're monetarily married.
Okay.
I'm not sure they necessarily see eye to eye and everything else, but I think that the market's knee-jerk reaction of, oh, wow, Powell's reappointed, the Fed's going to get more hawkish. No, the Fed's going to stay on the same course that they've been. The only question is whether they speed up the taper or not, because that obviously got the Fed funds futures market in a tizzy, because if the assumption is that they do, well, then that speed ups the path to an eventual rate hike.
Okay, well, without the Fed doing anything, doesn't look like the 10 years headed to 2% yield here, Peter?
Well,
it's pretty good, doesn't it?
Yeah, I mean, I think it gets there. I do, though, think that it comes along with still a flattish curve, and that yields essentially rise across the curve. When the Fed tightens, the curve flattens. When the Fed is easing, the curve steepens.
Right.
So while it's easy to say, oh, yeah, the 10-year is going higher because inflation is running at high levels, it's easy to make that knee-jerk, sort of a response. But because we're on the cusp of a tightening process, you could get a rise in the short end that actually keeps along and somewhat tame relative to where you would think it would go otherwise. Either way, like I said, I still think yields rise across the curve, but possibly in a flatter process, which is what we've seen. The 530s curve is the flattest since March 2020.
Okay. And I think about this, Peter, the market thought there was a decent chance for Brainerd. And I know that all presidents, except for our prior one, used to be pretty apolitical with the Fed and not talk about the Fed and not lambaste the Fed. But, we do have midterms coming up next year. And so far, the current administration, favorability isn't that great. Do you think there's, maybe some type of an arrangement that if we're going to have a stock market correction, that Biden would prefer to get it out of the way earlier in the year and have the market recovering into the election, than have the market continue to roll into, first quarter or so and then sell off into the election?
Well, I don't think any politician, well, first of all, I don't think there's a market sense within the administration even thinking about these things.
At all. Okay.
But no politician wants to see bad news in October before a midterm election. I mean, Lehman went bust 2 months before the 2008 election. When McCain lost to Obama. Yeah, now, I'm not saying that if Lehman didn't go bust and we didn't have a collapse in the markets in September of 2008 that he would have won, but no one wants to have that kind of timing.
Well, that's what I mean. Wouldn't it make sense for him to, be a little bit more aggressive about the taper and get it done earlier than stretch it out?
Yeah, well, even if they got it done in June, whether it's 6 months or 8 months that it takes them to do this, it's really not going to make the difference. I think the question is, because when you think about QE, the only thing QE has done is goose asset prices and monetize US debt. There's no real economic impact outside of, if you can try to tell me where interest rates would be without QE, I don't know. But the real tool in order to deal with inflation is going to be what they do with the Fed funds rate, not with what they do with QE. So on one hand, you can argue, yeah, they should. I mean, I think they should end the taper today with the inflation we're seeing, because they need to be more flexible with respect to the Fed funds rate. But of course, the Fed doesn't behave like that. They go slow when they tighten. They go fast when they ease.
Yeah. So I have a question that I'd like to ask you. The dollar's been on a tear. Okay, so the whole world came in bearish a dollar early last year. What do you think is behind this? Is it the best sturdy shirt out there? And when you look at it long term, could this rally possibly peak in the next several months? And would that be in the U.S. interest to see a weaker dollar? And I believe it would be an interest for people who are invested overseas, right? So is a stronger dollar hurting EM bond markets and stock markets, and basically everything outside the U.S. suffering with a strong dollar?
I mean, I like to look at the dollar individually in terms of different currencies that it trades off. It's trading well. It's traded well against the yen. I think a lot has to do with
yields,
the rise in energy prices.
Okay.
And Japan imports almost all their energy needs, especially since they shut down most of their nuclear reactors after Fukushima. So they're constantly exchanging yen for dollars in order to pay for all these energy imports. So I think that explains mostly the weakness in the yen. The weakness in the euro, well, that's somewhat easy now, because if the Fed is about to start tapering, they'll be doing it at a much quicker pace than the ECB, which we know is dragging their feet. The pound sold off on the day that the Bank of England punted on an interest rate hike, even though I still think they're going to do it in December. But you look at the dollar against the Canadian dollar. Yeah, I mean, the dollar's rallied a bit here versus the Canadian dollar, but just back to a level of September, and 127 here against the Canadian dollar. We got as high as 145 in the crisis last March. So is that really a rally? Well, it's sort of more of a dead cat bounce. Mexican peso, yeah, it's kind of stuck in a range. I mean, it's busted out here a little bit, but just back to where it was in March. But the peso was almost north of 25 last March. So yeah, and the dollar, yeah, it's rallying against the Turkish lira, but that's because it's the Turkish lira. So it's a knee-jerk rally based on the market pricing and more rate hikes quicker than not. I don't really think it's anything more than that. And again, I think it's somewhat idiosyncratic depending on which currency you happen to be in. The dollar trades somewhat poorly against the Chinese yuan. Chinese yuan trades great with all the trouble that people think that China is in, particularly with their real estate market. So I think you have to really just look at what currency the dollar is trading off. And if you look at the broader DXY, which is 70% yen and euro, so it's not really actually broader. But it's in the last 5 years, it's averaged 95.3, and today we're 96.7. So we're really not that much different than the 5-year average. So I just think that while there's no doubt that the dollar rally has taken people by surprise, well, some people are bullish on it. I just think we have to put it in context. That's all.
Okay. We're getting a nice little reversal. Maybe some news came out in the euro, which has been the weak sister. Who's sitting on the gold, Peter? I know a lot of people were looking at this breakout a few weeks ago, this breakout, right? And Powell's renomination, and a false breakout in gold. Similar situation in silver. We had a head and shoulders bottom, looked like a breakout, negated the breakout, and here we are. Silver actually holding up a little better than gold. Do you think this pullback that we're getting right now could be the last bus stop, or has the picture changed in gold? I say gold has to hold 1760, or we may even attack these lows down here. What do you think?
Well, I think a lot of the ebbs and flows this year in gold and silver have really coincided with the market's perception of what the Fed is going to do.
Okay.
So if you look at in mid-June, gold topped out and rolled over when the Fed said they're talking about tapering.
Right.
And then you fast forward to the meeting in first week of November, gold bottomed when they continued to call inflation transitory. People realize, wow, these guys are going to be really slow in pulling back. And then gold, of course, has sold off the past couple of days with Powell obviously getting renominated, Governor Waller saying that, and Bullard, who votes next year, saying that we may have to speed up taper. So it's whatever the Fed has done, gold sort of has traded up. But I think there's some short memories here of people trading gold, because in the mid-2000s, Greenspan raised the Fed funds rate from 1 to 5.25%. And during that period, gold doubled. And just look at the 1970s, where gold and interest rates went up basically hand in hand because inflation was running faster than the Fed. And I can almost guarantee that inflation is going to run faster than the Fed. So I think that's just the knee-jerk algo response right now to the change in gold. Real rates still remain firmly negative, of course. Now, granted, the dollar has bounced, but in the context of a sharp dollar rally here, gold's actually trading okay. You'd think that if gold was,
it was resisting. It was
more sensitive to the dollar. It's really been more sensitive to expectations yields of the Fed and less so of where the dollar's moving.
Yeah, more about yields than the dollar. That's what people price it as competition, even though, like you say, real yields are still negative. They're not as negative.
Right.
So who do you think is doing the selling, Peter? I mean, China's pretty committed to deleveraging and trying to tamp down on inflation. They're one of the biggest gold buyers over the last decade. Could they be behind some of this gold selling?
No, I mean, I think
you don't think so?
No, I mean, I think it's just positioning. It's
okay.
Hedge funds just puking it when they think the Fed's going to be hawkish, and buying it when they don't think they are. When they're going to be dovish. And
are you glad I didn't ask you the question about comparing gold's performance to Bitcoin? I've seen you field it a few times here. I thought you might be tired of it. So
well, the way that I answer that is that I feel that they're soulmates in the sense of, you're a bull on Bitcoin because you see what's going on in the monetary world. You see what's going on with the expansion of central bank balance sheets and the ability to print money, in an uncontrolled way. And you prefer an asset that has limited supply and blah, 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 blah. So I do have a problem with those that say somehow Bitcoin's going to replace gold. I think that's just absolute nonsense. When something's been around for 5,000 years, it's not replaced by something that's been around for 13 years. Because when you're around for 5,000 years, you've been through a lot. You've been through world wars, hyperinflation, deflation, monetary craziness. You've been through this, you've been through that. You've been around for 13 years. All you've been through is, a massive expansion of central bank balance sheets. That's
well,
it.
for me, Peter, that was when I was bar mitzvah. So, I became a man that day, so
that's right.
At 13. So, I'd been through a lot, braces and spin the bottle and
imagine,
all that.
I mean, that is a true test of metal. More so than if you were around for 5,000 years.
Yeah. So, maybe 22 is the year. It sure has taken a lot of patience to stick to your guns in this market. And I think we need a turn in the dollar, including the Dixie. And
yeah, I agree. I mean, right now, just from a pure technical standpoint, when you just look at the RSI and the Dixie, it's pretty stretched. The daily sentiment index in the euro is about 10.
Yeah, I saw that.
So
9. There was a 9 reading.
Yeah, 9. Yeah, so you're getting close to at least a short-term overbought condition in the dollar index. So
yeah, you probably sell the dollar, and the PCE may be the trigger for a reaction. What do you think? What are you looking for there?
It could be. You know, the PCE is a little less exciting because you already saw the CPI a couple weeks ago. So usually when PCE is typically around expectations, give or take a tenth. Again, because we've already seen CPI, which was quite a surprise to the upside.
Okay, Peter. And I hope we don't have to wait 5,000 years for the next bull market in gold. And
yeah, I hope that's the case too.
Yeah, and $1.25 disturbing. Okay, I'm just showing everyone this is Peter's blog website. And I recommend that you guys go there to bookreport.com, BOOCK, and keep up with what Peter's saying. And I tell you, you know, with all the interviews you do, you're a very patient guy, Peter, you know, because you get asked a lot of the same questions. You've been patient with positions, and most importantly, you've been patient with me through all the years.
Appreciate having me on.
You know, I hope you and your family have a great Thanksgiving and a nice holiday, Peter, and that one of your best years is right in front of you.
Yep, and to you guys as well. Thanks so much.
All right, Peter Bookfire, everyone. You could follow him on Twitter at pbookfire, and go to Peter's website to keep up with, you know, there's a reason that he's on every form of financial medium. It's because his insights are pearls. So go here and check out what he's saying. And that's going to be a wrap for us. I want to wish everyone hearing my voice that celebrates Thanksgiving a great holiday. You know, tell the people you're close to how you feel they're not mind readers. And above all, and, you know, should be Thanksgiving every day, but I know we get caught up in things like pulling pips out of the market. So don't just count those, count your blessings. And Stephen Sell will be with you Friday, and I'll see everyone back here again, God willing, on Monday. All right. Thank you, guys. Good hunting the rest of the day. Thanks for your attention and your support. And now go and subscribe. And I'll see everyone Monday. See you, Laura, Simon, Galaxy, everyone. Appreciate you guys. See you, Peter.